Good morning, traders. This is an update on my swing trade with SPXL. This is pretty interesting stuff because normally I write it for about a month. I get in and then it comes down a month later, stops me out at the 50 MA. This one's a little bit different. It almost stopped me out. So I was able to actually add to a winning trade, and we'll see where we're at right now. Let's take a look at the chart. So here's SPXL. It's a 3 times leveraged ETF. If you're not already familiar with it, it follows the S&P 500. And this is the current daily candle, and we're still trading today. The market is still open. This is still Friday. I'm releasing this video on Saturday. And the last trade ended right here on this red candle. I got in back here and rode this price action and got stopped out on the 50 MA line for a decent profit because I got back in way down here. So that was a nice trade. And then immediately the following day, it triggered my entry, which was to get in for the break of this daily candle here. And because of the size of this candle, you can see it's quite large, especially compared to the last one. I was only able to enter the position with 3 shares because I didn't want to give back all the previous profits from my last trade. So I calculated how much risk I was willing to take, and that worked out to be 3 shares. If you go back and watch that video, you could actually see that my plan was a little bit incorrect because I made the plan before the end of the day and originally calculated 4 shares. So I ended up day trading that single share that first day and making a decent profit because I got almost the entire, I probably stopped out up here on that day on that 1 share. So I removed that 1 share for profit. I ended up with 3 shares for this entire time, and then it looked like it was going to come down and stop me out, but it didn't. It came down very close to that 50 MA line. So when the next daily candle made a new high, that's where I entered for 1 additional share. So now I'm back up to 4 shares again. So my original position was right here, notated by this blue line, 105.26. As I said, we started off at the very beginning with 4 shares. I sold 1 share that day so that my risk was appropriate, just in case it stopped me out the next day. That definitely could have happened. And so I was only holding 3 shares for the remainder here. And then when the price came down here, I noticed that, wow, it came very close to the 50 MA and it did not hit it. It did not stop me out. There's a good chance, especially the way this candle is so green. You know, the candle opened up here close to the 50 MA. Throughout that day, it ran all the way up to this 115 level and then ended up closing just below 115. So that was a very bullish move, and that was enough incentive to get me to add to a winning trade. So even if the trade stopped me out the next day, which would have been somewhere around here, 111, let's say, I would have still been profitable even with the additional share because you could see adding that 1 share moved my position from 105.26 to 107.90. That's quite a big jump, but that's because I only had 3 shares at that point. So adding 1 share, you're adding 33% of your position size. So that's why it moves so much. If I would have had more position size to begin with and then just added, instead of 33%, maybe 10% or 15%, it would have been a very small jump. So that's just something to keep in mind if you're trying something like this out and you have a larger position size. It'll work out quite differently. Then let's see, where was I? So the 50 MA was here. So if I would have got stopped out the next day, it would have still been profitable. But the strategy is to continue riding the 50 MA up each day with my stop loss. And you can see this position right here is from yesterday. So that's from right here. You can see the 50 MA was at 112.27. Today, it's up to 112.70. So let's see. I don't know if I put it, what did I say? 112.27 yesterday. So let's do a little comparison here. With my 4 shares as of yesterday, my P&L would be 1748. If I didn't add those shares and I got stopped out yesterday, my P&L would be 2103. Now that's because the position price jumped so much when I added that additional share. I've already marked out where break even is, not break even, but where both of the trades would have amounted to the same P&L, and that's at 115.82. So we still have a few days, probably 5 or 6 days before the price will get there. But let's go ahead and move the stop loss up to where today's 50 MA is, 112.70. So this is the best part about swing trading, is when you get to move that stop loss up, especially when you're already in profit. So it's at 112.70, but we can go a step further because I want to get ready for Monday. I know as soon as the day opens on Monday, no matter where the price is, the 50 MA is going to continue to go higher. Even if it gaps down on Monday, the 50 MA will be higher. So we can project where the 50 MA will be. We're at 112.70 today, and we were at 112.27 yesterday. So that's what, 43 cents. So that would be 113.13, oddly enough. So let's go ahead and move the stop loss up to there, and then we can enter that into the spreadsheet and see how our P&L changes, especially compared to those 3 shares. But remember, we're still not going to be making more money yet with this additional share. The price needs to get, or the 50 MA needs to get to 115.82, but we're getting closer. So remember, this is our original position, and this is our position after adding that share. So we've moved a lot since then. So let's get back to the spreadsheet. We're at 113.13. So 113.13, whoops, goes from 1748 to 2092. So that's a nice little jump. And we compare that to, let's look at this really quick. I just want to show you how the effect kind of multiplies. So right here, the difference between these two P&Ls is, let's see, about let's say 350. And right now we're at 113.13. Let's see how the change is now. 113.13. So we were at a difference of about 350, and now it's looking, we're under $3 now, the difference. So you can see how the price goes up and gets closer to this 115.82. These two numbers are going to tighten up, and eventually after the 50 MA goes over 115.82, if it does, then this version of the trade will start making more money. I can just show you an example really quick. Let's put in 116 and see what happens. 32.40, and then 116 and 32.22, and then of course, if it continues higher, we can do another example. You can see how that additional share is going to be multiplying the difference in P&L, and that's why you can and should add to a winning trade if you understand what you're doing, if it's part of your plan and all that kind of stuff. So anyways, let me know if you have any questions about this. I do have a swing trade spreadsheet available at my patreon.com page, patreon.com/tradingarmor, if you're interested in that. If you have any questions about the spreadsheet, about the trading plan, about this trade, just let me know in the comment section below, and I'll get back to you. As always, go into every single trade with a plan, stick to it no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.